Recently, we looked at 5 stable monthly ETFs with dividends north of 10%. Did you think they were the only 5? Hold on to your seatbelts, folks. This is going to be a good one. If you're hunting for monthly income, you already know that the big challenge is finding those high yield ETFs the ones that hold up over time. It really really isn't a cakewalk. Like I said last time, a 10% yield looks absolutely tempting, but it can quickly lose its shine if the fund's value is quietly losing ground every year at the same time. Some folks in the investing space, they're going to tell you that it's just part of the parcel when it comes to income investing. I don't know about that. I personally do not subscribe to that. In fact, I found 5 great ETFs last time, and you bet I've done it again. We have another 5 bangers for you today. I also have a bonus for you as well. I updated the data on that last stable income ETF video, and at the end of this video, I'm going to combine the two together, and we're going to give you a top 10. Oh boy, that will be fun. A sub to the channel is the best way to combine some of that future content. The qualifiers for today's list are very similar to the ones we used for, that previous stable income ETF list. So once again, all the ETFs had to have dividend yields of at least 10%, and I only looked at ETFs with at least a 3-year history. In terms of performance, all the ETFs needed to have at least a 20% total return on their 3-year time frame. I was not as strict on that 1 year as well. There's been a lot of volatility, so we got to take that into consideration. Today's list was sorted, as usual, by their 1-year total returns. So without any further ado, guys, let's do this. Kicking off this list at number 5, we've got the BMO US Put Right Hedged to CAD ETF. We're talking ticker ZPH. This one, it aims to generate income by selling put options on the S&P 500 while also hedging the currency exposure back to Canadian dollars. At the time of recording, their current price coming in at $14.28, and they have an NAV of $14.14. Those assets under management, a little on the low side for this one, 28.3 million, and their management expense ratio coming in at 0.72%. Looking at their dividend, they do have a yield of 10.07%. That is a monthly dividend of 12 cents per share. On to the returns. On their 3-year return on investment, we're looking at 4.92%. But once you factor in those dividends, much better total return, 34.70%. On their 1 year, that return on investment, negative 1.72%. Adding in the dividends, we do get a total return this year of 7.35%. And finally, their 3-year annualized, that comes in at 10.44%. As I mentioned before, this does provide good exposure to the US market, but in addition to that, we have had a lot of currency movement lately, and this one, they've got you covered there as well with that currency hedge. Okay, let's take a look at number 4. We got the Global X Canadian Oil and Gas Equity Covered Call ETF, a ticker of ENCC. This one is our energy play as they hold an equal weighted mix of Canada's top oil and gas companies. Then they implement a dynamic covered call strategy, selling calls on those positions to generate, of course, monthly income. I will also add, this one does have a leveraged version. So if you're looking to ramp up the payouts even higher, the ticker on that one is ENCL. At the time of recording, their price was coming in at $10.34, and they have an NAV of $10.38. Those assets under management, $463.04 million, and their management expense ratio, 0.76%. Now, they do also have a trading expense ratio. That is coming in at 0.21%. Looking at their dividend, their yield, a nice looking 14.51%. That's a monthly dividend of 12 cents per share. Looking at their returns on the 3-year return on investment, that is in the negative 7.79%. But once we factor in those dividends, we do get a total return of 32%. On their 1-year return on investment, that comes in at negative 3.43%, adding in the dividends, total return 9.18%. I'm not liking the negatives in this one, but that's energy, and oil has had a rough time of it lately, and it does reflect in these numbers. But I still have a lot of confidence in this one. Their 3-year annualized coming in at 9.70%. I do love our energy sector, and this one can be very profitable for sure. Once oil rebounds, we could see some very, very steady growth on this one as well. Just, of course, keep in mind that you have covered calls, so you will lose a little bit of that upside potential. Okay, looking at number 3, we get the Purpose Enhanced Dividend Fund ETF, PDIV. This active ETF is focused on dividend stocks combined with a dynamic covered call strategy. They aim to boost income by writing options on basically up to 33% of their portfolio, while they're also holding those high quality Canadian dividend payers. At the time of recording, their price coming in at $9.18 and their NAV $9.19. Those assets under management 115.70 million and their management expense ratio 0.77%. Looking at their dividend, they have a yield of 12.42%, monthly dividend of 9.5 cents per share. Looking at their returns, their 3-year return on investment coming in at negative 8.66%. Factor in the dividends, total return 21.34%. On that 1-year, return on investment 0.33%. Add in the dividends, total return 11.75%. Their 3-year annualized 6.41%. In the current very much changing financial environment, this ETF's active management style may be a nice addition for sure. It means they'll adjust sector weights and option coverage depending on market outlook, potentially providing more resilience than a purely mechanical strategy. In our almost top spot at number 2, we have the Harvest Enhanced Multi-Sector Covered Call ETF, ticker of HDIF. This ETF holds a basket of other Harvest ETFs that combines several sector-focused covered call ETFs. So financials, utilities, healthcare, tech, energy, all of this into a single leveraged income ETF. They are using 25% leverage to help amplify these distributions. At the time of recording, their price coming in at $8.56 and their NAV, exact same, $8.56. Those assets under management, 443.77 million, and their management expense ratio, that is coming in at 2.36%. Looking at their dividend, they have a yield of 10.39%. It's a monthly dividend of 7.4 cents per share. Their 3-year return on investment, that comes in at 1.90%. Factor in the dividends, total return 31.88%. Looking at that 1-year return on investment, that's coming in at 3.88%. Add in the dividends, total return 13.76%. That 3-year annualized 9.66%. This is a huge one for diversification, and that can certainly go a long way in an income portfolio, as I hate to admit it, but it is one of those areas that often gets overlooked, unfortunately. Okay, in our top spot at number 1, we've got the Evolve Canadian Banks and Lifeco's Enhanced Yield ETF with a ticker of BANK. This one, it's pretty self-explanatory. Bank holds, the Canadian banks and our big insurance companies as well as Power Corp of Canada. They also utilize leverage as well as covered calls to increase their overall potential for some extra income. At the time of recording, this one was priced in at $8.14, and they've got an NAV of $8.13. Their assets under management, 514.28 million, and they've got a management fee of 0.60%. Looking at their dividend, they have a yield of 15.81%. That's a monthly dividend of 11 cents per share. On to the returns. Their 3-year return on investments comes in at 9.26%. Factor in those dividends, total return, holy banana bread, I like this, 52.32%. On that 1 year, That return on investment, 16.29%, add in the dividends, total return, 33.14%. Looking at their annualized, that's coming in at 15.06%. The resilience we have seen in the Canadian banking sector has been very good for this ETF. And I suspect the resilience is not going anywhere. This is a good ETF for sure. Okay. We have seen the new ETFs this time, and you must be wondering how they are stacking up to the previous batch. Well, wonder no more, as I've sorted them into a top 10. Once again, I did update the total returns on the previous list, so we are comparing, well, apples to apples. At number 10, we got that BMO US put right hedged to Canadian ETF, ZPH, coming in with 7.35% total return. At number 9, we've got HYLD, so the Hamilton Enhanced US Covered Call ETF with a total return of 8.45%. At number 8, we've got ENCC, 9.18% total return. And that one, of course, is the Global X Canadian Oil and Gas Equity Covered Call ETF. Number 7, we got the QQCC, the Global X NASDAQ 100 Covered Call ETF. They have a total return of 10.89%. Looking at number 6, we got the Purpose Enhanced Dividend Fund, so ticker PDIV, total return 11.75%. All right, let's crack into the top 5. And kicking off the top 5, we've got HDIF, so the Harvest Diversified Monthly Income ETF. They've got a total return of 13.76%. Number 4, HDIV, with a total return of 20.34%. And this one's the Hamilton Enhanced Multi-Sector Covered Call ETF. Top three. Number 3 is, well, today's number 1 is at number 3 on this list. Bank, the Evolve Canadian Banks and Lifeco's Enhanced Yield Index Fund, 33.14% total return on the 1 year. Not too shabby. All right, what do we got at 2? Well, we're sticking with Evolve, and we've got the Evolve European Banks Enhanced Yield ETF, ticker of EBNK. Their total return, 29.13%. So there we go. That's all of them except for, well, wait a minute. We got number 1. We still got number 1. Number 1, blowing this competition out of the water, is that Purpose Bitcoin Yield ETF, BTCY, total return 72.07%. Holy banana bread. Oh boy. Yeah, they're going to be hard to beat for sure. If you are interested in any of these ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on our TFSA challenge. Thank you for watching, and I will see you in the next video.